You're one of the smartest people that I know.
Well, thank you.
How did you get involved in AI?
I've always been involved in technology. So since a little kid, I remember playing with the computer that my dad has at his business. So I was programming BASIC at 10. So I was always involved with technology and computers, and got an internship with a subsidy of Microsoft back in Brazil. And I never left technology, always working towards collection of data or managing data. One of the things I did at my early age was a surf line where I would have informants at the beach calling me to give me the surf report, the wave height and direction and so forth. So I'll put together a report and put it onto the phone company where I was getting like 60,000 calls a month. And selling advertising on that at 18. That was age 18. But I got involved in AI because back in the day when I was in college here, I worked for a company that was a software developed company that did document imaging. And one of the softwares that they developed was for high-speed scanners to scan large quantity of documents, millions of documents into the computer. One way to extract information was using something called optical character recognition, OCR, and also barcode reading.
We're gonna talk more about that and many other things as we talk about today on this edition of the Loan Doctor podcast. How can software integrate with your business, but also specifically how it integrates in the mortgage experience?
Okay.
So we're going to talk about that again on the Loan Doctor podcast. I'm Rich Brandt, the Loan Doctor with the Brandt Lending team. Welcome to my waiting room. And I'm here with my good friend, Jarvis Besnos. So Jarvis, we talked about it on another edition of the podcast, but we have a unique story for how we met. Tell us about it.
We met a executive training from Jim Moran Institute taught by Florida State University. And it was a great training for entrepreneurs, aspiring entrepreneurs, where we have a CEO roundabout, right? And basically, each one will bring a question or a problem they have at their business. And anybody would answer how they solved that issue. So I remember you saying that you had an issue, you wanted to hire a friend of yours, and everybody was like, pitching in now, you should not. I say you should not.
Right.
I remember that. And you end up hiring
That's
this
correct.
person. But it was a great training. It was a great exercise that you would see something in real life that CEOs went through, the same things that you went through. And then you got a solution or you got an insight on what to do.
Yeah, I kind of thought about it like it was almost like having a little group of board of directors,
Definitely,
like my board of directors, right? They would help me analyze problems about my business that from their perspective that they would see, and we would do the same thing for other businesses. Which were great. And many of the people who are listening to this podcast are entrepreneurs, right? I deal a lot with people who are self-employed. Getting financing for people who are self-employed is always a challenge. And so for those people also, this kind of thing, like being in a room full of other people, other executives that have the same challenges, even though they might be in a different industry, was super rewarding.
Not only that, I continued that exercise with my friends. I used to invite them to have a beer, like 3 or 4 or 5, and then we will have the same exercise among my friends. So I kept going in the same direction.
I think it's great. Now, I also helped you with your mortgage, right? What was tell us about your situation?
Well,
back then. What kind of happened? What led you to come?
Right. So we met probably 10 years ago when we were doing this this training, and I was about to buy a house and I couldn't find financing because at the time I was a foreign national. We had plenty of history, financial history back in Brazil, but we couldn't find any mortgages, any loan officers that would give us a mortgage. So I remember that you being in that position as a loan officer, and I reached out to you, and you as a loan doctor put the pieces of the puzzle together and made it happen. So we actually ended up buying a house through you. It was a great experience, and I was really grateful that you could be able to solve it because no other bank could make it happen.
That is, I appreciate that. I think that we do a good job of kind of looking at the pieces and figuring out how they kind of fit together to make it. What were some of the things that surprised you most about the mortgage process as a business owner at the time?
I thought it was very manual intensive. I think a lot of the processes in terms of following up with me and everything was, from my perspective, being a techie guy, I think everything was very manual. So I always, as an entrepreneur, you always try to find the best way of solving problems. And that's what I was trying to, I saw little details where you could have been improved. So that's being a borrower. And then when I became part of the mortgage industry, and then probably you're going to touch that as well, then I saw even more problems that could be solved with technology.
Yeah, technology there's a big benefit to technology into what we do. A lot of the things that are done in the mortgage industry can be automated to improve the borrower experience that you had.
Yes.
For my question though, before going back to surprised you most, not necessarily the experience of the process, but what was it that surprised you most about how challenging it was for you to qualify?
It was very surprising because I thought that just having money would qualify you, but it was far from the truth. So you have all sorts of check boxes that you have to fill in order to qualify.
Right.
Sometimes, and again, what made the difference to do the loan with you is that you're able to understand the full picture.
Right.
You weren't cookie cutter. That if you don't qualify with on a vanilla loan, that we'll make it happen. And I've seen even with you some loans that couldn't go through, even though everything looked perfect on paper, but all of a sudden one box didn't check and the loan didn't go through. It's a challenging process. So,
yeah, a lot of times what happens is with the mortgage process and with people don't realize with self-employed people is it's not just income,
right,
but it's how the income is generated. You know what I mean? In terms of duration, what kind of income it is, and all that kind of stuff, to be able to analyze it properly. And sometimes the way that I kind of describe it is when you're dealing with somebody who is self-employed, it is often different what they can afford, right? And what the rules say they can afford are not even, I don't want to say the rules, but what their paperwork says they can afford.
Right.
Sometimes is a little bit different. And so one of the things that I do is as a professional is make sure that I analyze what that real income is. What's the real affordability, so that we're buying the right house,
right?
And not putting them in a situation that they're going to succeed, which you have. So you touched on it a little bit from a documentation standpoint. What were some of the biggest frustrations you experienced during the process as a business owner, just for the fact that like, I don't understand, I make money, what's the problem?
Exactly that we had income abroad that we were bringing in, and even so we didn't have anyone that could figure out a way to lend us money. So until you came along and you figure out a way out to do it. It was just frustrating, and I think, and I've seen, working in the mortgage industry, that happens very often. That professionals that make income, but the way they manage the money actually doesn't make it qualified for a mortgage.
Right. Yeah. No. Absolutely. And full disclosure, Jarvis and I actually worked together. He handled a lot of the marketing for the Brant Lending team and business development for the Brant Lending team, and some things at North Point Bank for a long time, and really is instrumental into some of the successes that we've had.
Oh, thank you.
From your perspective as a borrower, what do you wish self-employed people understood when they're applying for a mortgage?
It's a tough question.
Okay. That's why they're asked. We ask the hard-hitting questions here. Yeah. We don't get softballs.
I think the education. Education is key.
No. We're not going to go there.
It's the education is key, right?
Okay.
Because being new from the mortgage standpoint, for me in the U.S., I didn't know anything how it worked and what documentation is needed and why so much documentation was needed. Even though we were sending documents, more documents were needed to be sent. So it frustrates us, but it's an educational process. I think managing expectations will be a better way of doing it. So right out of the bat, you're going to go through it, and you have a great way of posing that, which is the colonoscopy, financial colonoscopy.
Right.
So
Going
which
through
is
the
perfect.
loan process is like
Because
getting a financial colonoscopy.
Right,
Yeah.
it is really challenging, and it's not an easy process at times. Sometimes everything's clear, people are organized, and we've seen in the mortgage industry when you have doctors making millions of dollars, and all of a sudden the guy owns $30,000 on his credit card, and then right, it's a way of managing expectations from the borrower.
Okay.
And education of the borrower. So the more educational videos, the more literature that the borrower can have, I think makes a difference to manage the expectations and going through the process.
That's
smoothly.
something. Yeah, that's something we definitely try to do when we're dealing with people who are self-employed, is just getting them to understand that process a little bit better. I say this a lot of times with most loans, probably 90% of all loans, the rule book is the same for everybody, because it's not necessarily the lender whether you're going to Chase or like a big bank or a bank like North Point or a mortgage company or anything like that. It's we're playing to the rule book of the secondary market.
Right.
So and it's their rule book, and there might be a little bit of interpretation sometimes and things like that, but the playbook is kind of the same. And I equate it. I use sports as a metaphor a lot, just because in sports, and if you look at football specifically, all 20 or 32 teams have the same set of rules. Yet some reason the Patriots are able to do it better, the Chiefs are able to do it better, and all that kind of stuff, even though they're all playing within the same limits. Right? Well, why is that? Well, there's lots of different reasons, from their office staff to their players to the coaching. What have you. And so the same thing happens in the mortgage industry, is even though we're playing by the same rules, we don't necessarily all do it the same way or do it as good. And then being able to help people sort of understand the way that we have to look at things, or why we might look at something different or go to a different loan program just because we can't look at something like X. You know? So now that you've experienced the mortgage process as a borrower, did that influence how you built your technology? I think it did. You touched on it.
Definitely, because I felt the pain of the documents that needed to be submitted. Not only I needed answers that sometimes I didn't have it at the time that I wanted. And when we worked together, I saw the other side of it, which is why you couldn't give me information, because we didn't have the information yet. Why we didn't give information? Because you didn't send the documents yet. So I saw that pain point from the loan officer's standpoint, and I wanted to solve it. So that's when the embryo of this platform that we developed started.
I think that something that often people kind of overlook is when you're going through the loan process, so many times people are concerned with what are our rates. Right. Or what are the rates or whatever. And the fact of the matter is that when you're borrowing money from a bank, the pieces to your puzzle matter even more than whatever we're sort of offering. Like the pieces to your puzzle sort of dictate what the terms are. And so many times what happens in the process is people want to get information, and what's horrible, a lot of lenders do this. A lot of lenders give them information, right? So they get comparisons. The problem is that if a consumer doesn't give the lender anything, then all the lender is giving them is a number.
Right.
They're not giving them
rate.
the number. No, but it might not be a higher number. It doesn't matter what the number is. It's if I tell somebody that they can get a rate. The other day I locked somebody in at 5.5%. Anybody who hears this is going to go, oh my God, 5.5%. That's unbelievable. Why can't I get 5.5%? This particular guy's situation allowed him to get 5.5%. Right. His situation was very unique, right? But so what ends up happening is that's the only reason that rate existed for him. But if I told you and you called me and said, hey, I'm going to get an average person who's putting 3% down or 5% down, you're going to get 5.5. That's probably not realistic for today's market. It doesn't mean that it's never going to be realistic at some point, but you get the idea. And so I think what ends up happening, what you kind of found out, is that really for you to get information, and I use that term again, for you to get your rate based on the pieces to your financial puzzle and not just some number that makes you feel good, you have to provide documents first.
Right.
And then that process can be a little arduous.
Yeah.
So tell us about the platform that you designed.
So we designed something that is called a Loan Doc, and pretty much helps loan officers and loan processors speed up the process of your loan. So basically, it analyzes the documents using AI. It's not training models. It's not keeping your information. Basically, it just compares if the documents you're submitting are under your name, and if they're the right documents that were requested by the loan officer. It does that automatically in under 10 seconds. And then if you're missing some documents that were requested, the system automatically, via AI, sends an email, sends a text, or sends a voice message that can be cloned from the loan officer, so it makes it more personable until you submit all the documents. Once the documents are submitted, then it clears out, sends a thank you email, thank you SMS, or voice call, and pretty much the whole process is done.
Now, most of my clients are self-employed, and a lot of people who are listening to this are self-employed. Are there, and we haven't really talked about this, so I don't mean to put you on the spot. We get the hard questions here. Is there potentially other uses for the software, or is it specific for the mortgage
Definitely.
process?
We have versions now for immigration attorneys, for insurance. So we verticalize in different segments as well. So
Okay,
yeah,
nice.
it's pretty much the same skeleton, but
Okay.
we can use in different markets where document is very intensive. So the document exchange is very intensive. So that way, we're able to speed up the process and save money as well.
Yeah, so I was going to ask you, how does this technology that's built to make how does this impact the borrower and make it easier for the borrower and get them to go from the start of the process to closing faster?
So the borrower has two choices. It depends on how the loan officer customize the software. You can go through the portal that you already have or through our portal. So the documents are requested. Once the borrower uploads the documents, instantly he knows if that document is approved or not. If it's not approved, it's going to be on the list to be reminded via SMS, email, or call. So for the borrower, it's somewhat of a peace of mind that someone is reminding them that they need to send documents. And there's a scheduling, auto schedule that every so often those documents are requested again. So that's from the borrower's perspective.
So if you're a consumer, if you're a borrower getting a loan, so what happens is the lender's gonna send you the list of stuff that you need.
Right.
Right. You're gonna send in that stuff. Hopefully it's all good. Sometimes people send documents in. Like one of the things that happens a lot is that we'll ask for a mortgage statement, and they'll send us the 1098, which is the mortgage tax bill.
Right.
Right. That happens a lot. So what happens in your process when somebody sends in a document, but it's not the right document? Does your system send them an alert?
Automatically. In 10 seconds, it evaluates if the document requested is different or equal to the document received.
Got it.
Right away, the borrower sees a message, your document does not comply to what we requested. And then it goes into the queue for a reminder via email, text, or voice.
Will it tell them like why the document isn't right?
Yes.
Okay. Because one of the other ones that are big that we get from borrowers is we will ask them for a bank statement, and they will send us a screenshot.
Right.
And a screenshot of their balance tells us how much money they have at a moment in time.
Right.
And what we need to see, but here's what we need to see is well, how much money moved in and out of their account over a period of time,
right.
not a moment.
Yeah.
So does your software sort of define what it is that the lender's looking for? Because I think a lot of times people are more apt if they understand the why.
Well, the software tests right now. The first version is testing what kind of documents are being received. Okay. And the quality of the documents. Sometimes people take a picture of the statement rather than scan. So it even tests for the quality of the document being received. On the second version, we're going to actually extract more information from the document itself. So we're testing models so that will be compliant to the regulations, so that that data is not touched by anybody, is not saved, is not trained on any LLM models, is simply and pure to compare information that was requested to what was submitted.
Will the system be able to compare, let's say, we get, so when we're getting documents from a bar, we get like a driver's license, tax return, bank statements.
Mm-hmm.
Would it be able to compare if all the addresses and the name
Yes.
are the same?
That's already doing it. So it compares names, addresses, and actually we have a little box that you can check to more information that you want to compare, like a docu-match kind of thing.
Gotcha. Now, one of the biggest complaints the borrowers have, not with me and the Brant Lending team, because it doesn't happen here, but I've heard that this happens. I've heard that this happens, that people don't know what's going on with their loan.
Right.
How does your technology improve that?
Again, we're communicating with the client, with the borrower often. And not only the borrower, but also we can communicate with the realtor that is your partner, referral partner, right?
Okay.
So we can send messages automatically via, again, voice, text, and email, telling them, listen, this file is at this stage of the process. For the borrower, listen, we didn't get the document that we needed, so we are at that stage of the process. So the idea is communicating with the borrower and with your partner, your realtor partner often. So everybody's on the same page, everybody knows what's going on, and that's automating a task that usually done by a human that could be doing something else at more expensive cost than just AI software.
So one of the things that has always concerned me about AI is does automating the process actually make the process feel less personal or more personal?
The way that we try to compensate for that, for example, is on the voice call. That could be your cloned voice. And I have a sample. I did a sample of your clone voice. It's perfect.
Oh, no, it's creepy as hell.
It's creepy. No, it's not creepy because it sounds like you.
Oh,
it is creepy. The technology is getting to that point.
No, it's creepy that it talks to my girlfriend and she doesn't know that it's not me.
Exactly. Yeah. But back in the day when we started to play with AI, remember we did your clone, your avatar.
Yeah.
Back in the day, they were charging $8,000 for your avatar. It looks a little robotic, but nowadays technology got so much better. But the way we humanize the process is to have your voice and your brand voice on the email, on the text. So that way, when the client receives the call, it's from Richard. It's not from the loan process, which is something that when I went through the process, I was just dealing with you. All of a sudden, your loan process called me. I say, who's this person calling me for documents? Right. I felt a little odd that I had to talk to this person now. Where's Richard now? So that way, we can solve that issue with humanizing the process with your own voice. Making the calls.
But even with AI, I guess going back to that question about like does it take away from the personal or make it more, is it could be my voice or it could be somebody's voice, right? It's not mine. But the question is if they're getting a call from a robot and whether whoever it sounds like, I think people at least now kind of still know
they're getting used to it,
that it's a robot. Does that take away from the personal touch? Are you advocating that if you do this, you don't still have to talk to people?
No. Because I think it's It's complementary,
right?
They can actually say, I want to talk to someone live, and then it's going to transfer to your team. If it's in the case of a call. On an email and text, they can respond, and the system has an inbox that is going to show all the messages are coming from the different methods.
Well, I think one of the things that it does for me is and this is kind of the point that I was kind of leading you, is that what ends up happening is even though the automation is doing so much more stuff, that leaves the loan officer to be able to do also, where I could talk to the borrower more because I'm not going down and looking, doing some of the work that bogs you down that you can't interact and kind of advise and things like that.
The loan officer should be doing, prospecting and creating relationships and taking care of the file, right? The AI and automation is taking care of the minimum jobs that can be automated. It's simple as that. We're not taking away anything from the humanity of the process. And the loan officer has more free time to build more relationships, bring more business. And again, the system
so that means the borrower gets a better experience.
A better experience. It's loan's going to close faster, right? They're gonna know where the loan stands at any point. But not only that, at the loan officer's perspective, if you're chasing document 15 hours a week, right? If you close an additional loan, it's another additional loan a month. Yeah. It's probably like another 40,000, 50, 60,000 a year, just because automation created that scenario for you.
Gotcha. Now, one of the biggest reasons loans get delayed is missing documents, especially or needing something new or a document that came in caused you to need something else. How does your system help prevent those last-minute surprises?
When they're missing documents, well, again, there's a schedule for the documents that were requested. If a new document is requested, the loan officer puts into the system, and the system is going to start sending those messages again with the new requirements.
With the new requirements. And then it also, the big thing, I think what happens a lot of times with buyers is, or borrowers, is that, you know, this getting the mortgage isn't the only thing they're doing. And so life happens, and they forget, oh, I had to send these documents.
And sometimes you don't have the documents at the same time.
Right, like, they don't have the documents when they need it. Oh, yeah, thank God.
I need my accountant to get it.
This kind of gives them that gentle reminder all the time. Hey, by the way, we still need this. And then your system, as I send documents, the system updates the list of stuff. So if I don't send if I'm asked for 10 things and I send 7, the system is going to still ask me for the other 3, right? And it's going to know to distinguish that I already sent it if the things are accepted.
Exactly. You have 2 choices. You have the automation, the document match automation, or you have just receiving the documents on your existing portal. So that way we are compliant with different clients that might have that requirement.
Got it. We touched on this a little bit, but the automation process, how does the automation process allow loan officers to spend more time advising the borrower instead of chasing paperwork?
Again, as we just discussed, 15 to 20 hours a week chasing documents, where those 15, 20 hours could be talking to borrowers and solving the puzzle, their financial puzzle, or prospecting new borrowers, or making relationships with realtors. That's how the time it's better spent.
Got you. Now, at the end of the day, how does technology like what you design create a better mortgage experience for the buyer?
For the buyer, everything is transparent. He knows which documents are received. Sometimes he sends a document. I remember back in the bank, so clients would send documents via text, via email, fax. So this way we're unifying the way to receive documents. They know, sometimes they forget, they send 3 times the same document, right?
Yeah.
So the system will tell, listen, I already have your W-2, don't send them more of that. So we're trying to get them, it's transparent for them. They will know the documents they're missing. They know what the stage of the process, the loan is. The partner will know, the realtor will know, the loan officer will know, the loan processor will know. Everybody on the same page. The system just automates things that need to be automated because it's tedious, and it's just a way of getting things faster so everybody can be happier with the end result.
Right. One of the pain points I hear, and again, this doesn't happen with the brand team,
no.
But I've just heard this existed, that people go, well, yeah, I've already sent you that document.
Right.
I've sent you this document. I've sent you this document. This is the 3rd time I'm sending you the document.
Right.
Again, not stuff that happens on the brand team, no. but I've heard that this happens. And so how does the system, if somebody sends in, because a lot of times what happens in those situations is somebody sends in documents that are similar. I'll just kind of give you an example to sort of be specific, but we'll ask for somebody's W-2 for 2 years, and they'll send us 1 year of W-2, and then they'll keep sending us the same W-2. Right. So how does your system kind of let them know, and is it kind of designed to let them know, this is what we asked for, here's what you sent, and then you sent it 2 or 3 more times the
Right.
same document, but what we need is this.
That's the beauty of AI, right? AI is actually reading the document and thinking about it and comparing to what it has on its database.
Okay.
Not that it's stored, but at that moment. So when the document is sent twice, AI is going to analyze, hey, listen, you already sent twice. So it puts into the queue to send another message to the borrower. Hey, that's not what we're looking for. We're looking for the other, the other W-2s.
So it's able to say, this is what you sent, and this is and
definitely.
we want.
However, if you want to manually do that, there's a document management portion of it that you can just click open, you see the document, and then you take action on
I got it. Okay. So really the AI kind of assists to make it a little bit, lets you react to it a little bit faster if you get the wrong document.
But you do have the manual component to have the document open for you, and then you can analyze visually and analyze the document. But again, we're trying to avoid the borrower to send documents via email, text, but if they do, and if it's legible, it goes into the whole system. It goes into the process. If it's not, it can send a message saying, "We got your ID, but it's impossible to read because he took a picture. It was dark, so we cannot read it."
Well, the other thing I like is I think from a consumer standpoint, a lot of times what will happen is the consumer will send a document, and there isn't a human being that's able to look at the document the moment you send it. Right. So it might get looked at 24 or 48 hours later, and then it turns out to be the wrong document, and then you're like, you don't know for 2 days. This is going to speed that whole process up.
10 seconds. If they're uploading via the portal, it's in 10 seconds. It gives them what kind of document it is, if it's approved or not, and what the reason the document is being rejected.
Now you were saying that you don't store the information.
Right.
So if you're not storing the information, I'm assuming that's for personal identifiable information, and I'm going to ask you about that in a minute. But if you're not storing the information, how does the system know that you sent me the same document twice?
Because we're not storing the personal information. We're storing, he sent a W-2.
Okay.
The document type.
Oh, gotcha. Okay.
We know that was from Jarvis. We know it was a W-2, but we're not storing, that. And whatever is stored is hashed. What is the right term? Hash, it means that is. Forgot the term.
But you mean redacted?
Not redacted is
you can't. It's not legible.
It's unlegible. It's a code that it's in the database. So if you try to hack it, you're just going to see a large string of characters that doesn't make sense. The term is hashed. Yeah.
Right. So I was going to ask you about that. So one of the things
encrypted. That's what
encrypted. One of the things that happens with documents as lenders is lenders are getting documents from people that oftentimes have a social security number, have bank account numbers, have we're not getting passwords, but those kind of things, right? So what are you doing to protect that data, or is the system integrated to that's already?
We have the loan officer has two choices. One is to use the DocuMatch portion of it. The other one is just to receive documents on this case on the bank's portal, and then you just manually check which documents were received. So you manually do the same process that you're doing it. So the system would just be an alert system of documents missing.
I got it. I think so. One of the things that you're sort of referring to for people who don't know is that, like at North Point Bank. When we receive documents, we have a secure portal for those documents, and that secure portal already gives somebody the protection. The bank spends hundreds of millions of dollars to make sure that we're protecting somebody's personal identifiable information when they send us stuff. Our system is crazy.
Bar none, yeah.
So my question had more to do with the company if the documents aren't going to your portal and being manually done, they're being handled on your side, because some institutions, some people will be able to do that. If it's handled by your side, what are you doing to protect the person's
We use all the large language models that everybody uses, and it's the professional version, so everything is protected. Again, everything is coded, hashed, and encrypted, so there's no way for someone to hack that information. So that's, and again, if you want to use the DocuMatch portion, we can handle that for you. If not, we have the you can just put a link of the portal of the bank, but brokers usually use the document system, which they don't have as many requirements.
Now, somebody's out there listening and they're thinking about applying for a mortgage. What should they expect from a lender that uses your technology as opposed to a lender who isn't using your technology?
Faster, more reliable, and more transparent process. You know where your loan, the process where your loan is at, and the documents are going to be submitted, and you're going to be having reminders every so often that you haven't submitted those documents requested.
Gotcha. Okay. Now, the other thing is that the documents are a key, this is just because I can't ever turn off the loan doctor hat.
Mm-hmm.
How the documents are looked at are something different, which is why you need somebody like me. But the documents, your pieces are super important, and then how those pieces are reviewed and analyzed and how they kind of all fit together, like we said earlier about the pieces of a puzzle,
right,
are just as important too. So for somebody who hasn't applied for a mortgage to like, let's say in the last 10 years,
mm-hmm.
how is applying for a mortgage today different than it was then?
I don't have the experience for 10 years back then.
Okay.
My experience
goes back 5 or 6. So so let's do that.
I think if everything it's coming to a point where it's going to be way more pleasurable to apply for a loan, because I think AI was bringing is more information and taking out the tedious task of getting those tasks performed by a human person. By a human, by a person, and
a human person as opposed to a non-human person.
Right, it could be
right.
But because again, it's sometimes the loan processor is so swamped with tens of files that they don't have time to give you the right attention or to give you the right care, and sometimes things fall through the cracks. So with those systems, the loan processor and the loan officer, they have more time to take care of their borrowers.
Yeah, what I find is that if I compare this over the last 6 years, is technology allows us to react faster,
right,
a little bit faster, but also I'm able to do a little bit more
mm-hmm.
than if I didn't have the technology. My loan partners are able to do a little bit more if they didn't have the technology. So we're able to help more people at a time,
right,
without more staff.
Yes, definitely.
Okay. Now, do you think that AI will replace loan officers?
I think loan officers, it's a personal relationship. It's a networking, and your case is one of Yulia and Beth, your mom, are the case. It's a relationship building for the past 30 plus years, mm-hmm. right? I don't think that's going to replace. It might replace some portions of the loan process, maybe underwriting. We're trying to replace this portion of communicating. But yeah, it's been said that a lot of professions are going to disappear with AI. But professions have been disappearing for hundreds of years in when technology comes about. So I don't think it's going to be an issue, because if people are aware that AI is coming, they should be prepared. So if loan officers, I think they're going to lose their job, they should start learning AI and how it can help them to not lose the job for someone that knows AI. So right. I think for any profession, I think you should learn new technology, new things every time. I go back to college once every 2 years. I go take a class at FAU. I'm constantly learning online, taking seminars and webinars, because it's a non-stopping process. So AI, it might take some portions out, but I think the human touch is always going to be there. And that's why loan officers need to be there, because they have that personal touch.
I built recently. I recently went to Antarctica. But before I left, mm-hmm. I actually built my first couple GPTs.
Oh, wow. Now?
Just
5 years later?
5 years later, just to kind of, look, it's a process. But yeah, you're right. I think the loan officers that are going to exist in 10 years are the loan officers that embrace technology and worked with it instead of trying to fight against it.
Any profession.
But yeah, it was interesting. I don't know who's built a GPT before, mm-hmm. but it was funny. because one of the things that I didn't realize is that you have to, so you've got the programming part where you're programming the AI to how you want it to think.
Right.
And then after you get out of that programming mode, if you give it more data, it doesn't remember any of the more data you gave it to out of the so when you change the programming parameters and you're not in programming mode, it doesn't remember any of that.
Yeah.
Yeah, so I had to do it 3 times.
But you see, that's, we touched the point of data security. If you don't provide instructions on to store the data, you won't, right? So when we built our platform, we told them, don't store data. This is something that it's proprietary. We don't want to touch. So that's how we design it.
So what's something about the mortgage process that borrowers would be shocked to learn? And I think we kind of touched on it a little bit.
You might not be qualified, even though you make a lot of money.
Okay.
That's shocking. Yeah.
That one's interesting. One's interesting. Right. I think a lot of times people are the way. One of the ways that I say this, if you think about it, when a bank is lending somebody money, a bank is really making an investment in that person,
right,
in you. The interest rate that they're charging is their return on the investment, right? When you think about an investment, right, if you were going to buy a stock, right, the more you know about the company, the more numbers you get and all that, the probably the greater value that stock is going to have, right? But if if you don't know a whole lot about the company and it's just a shot in the dark and you hope, right, the expectation would be that your return would be a lot higher.
Right.
So from a consumer standpoint, the more the bank knows about you, and it's good, right, generally the cheaper it is to borrow money.
Yeah.
Because the bank doesn't need as much as a return.
But the other shocking thing could be the opposite as well. Some people don't know they qualify.
Right.
Because you have so many programs, Hometown Heroes, 5% down. So sometimes they don't know. It's, again, goes back to education. And why podcasts like Rich Brand's Loan Doctor is important is to educate clients, borrowers, because they just don't know. And programs, they come and go. Sometimes the government has a program. Sometimes the bank creates a program. So sometimes you qualify now. A year later, you won't from your puzzle.
Yeah. If I could give somebody advice about that, if you're self-employed and you're thinking about buying a house and you don't know if you qualify, don't assume that you don't.
Because we might.
Go get the information, 100%. Absolutely. Yeah. There's a lot of people who qualify and don't realize they qualify. And even sometimes, sometimes people come to us and they don't qualify. They don't. But what we're able to do is give them a mortgage roadmap so that we can build a timeline for them to do the things that they need to do so they will qualify.
Right.
And I know I recently had a client, again, a client that was self-employed. We were going through the process for them for 2 years. They followed the pipeline that the kind of goals that we set up. We would check on them every couple months to make sure that we're still doing the things that we wanted to do. They had a pretty complicated puzzle. They had some credit challenges and all kinds of stuff. But we kind of walked through the whole thing, and it was so rewarding when they finally closed. It was. We changed their life, and it was awesome. 5 years from now, how will technology change how people get a mortgage?
I think it's going to be faster because of, the things that we entrepreneurs are building. It's going to be more transparent. It's funny. I think it was Bezos was at a podcast, I think in Miami actually, which he just moved.
Yes.
And he was saying that for getting a house permit, you should just take a picture of the plants, take a picture of what you have, and AI can really, in a matter of seconds, tells what's wrong with the plant and go and have an approval rather than months to get it approved. So some of those things are going to happen in all fields, from medicine to design to everything. So we have to be ready, and hopefully we'll work less. I think everybody's going to work less because AI is going to be doing a lot of the legwork.
I don't know if it's going to be in 5 years, but I think in the next 10 years, you're going to be able to buy a house as fast as you buy a car.
Yeah, I agree with you. I agree with you.
So you've been on both sides of the process as a borrower and on the technology side. If you could, and maybe you're doing this, if you could redesign the mortgage process for entrepreneurs from scratch, what would you change?
If I could redesign it.
Yeah.
Well, I think we are redesigning it. With this little portion, we didn't want to build something larger with CRM, with underwriting. We just wanted to solve a little issue that could fit in different, from brokerage to banks, because those institutions already spend a lot of money developing their systems, and I don't think there's a market for me at least, to solve problems that are already solved. So I don't want to reinvent the wheel, but creating pieces of software that can connect to existing systems, I think it's a way to go. That's how we're trying to approach the market.
So you're a successful entrepreneur, and qualifying for a mortgage still had its challenges.
Yep.
What would you tell other business owners trying to buy a home?
Search for Rich Brent.
Nice. You know what?
Perfect question.
Oddly enough, that's actually the right answer. That's crazy enough the right answer.
Rich. I mean, we know each other for 10 years.
Yes.
We searched from our bank to recommendations to finally, I remember, I knew a guy that did mortgage. And again, you're just starting on mortgage. You're taking over your mom's.
At the time, yeah.
So you didn't have the follow-up. You didn't have the database follow-up that you do have now.
Yeah.
Saying, do you need a mortgage or a referral?
Right.
So that's, it takes education. It takes for you to research to fall into the hands of the right person that will solve your problem. And you did. And because we shop, I don't know, 20 banks and institutions, and we're like, nope, everybody shut the door on us. And, we had the means. It's just that nobody saw what you saw, how to solve the puzzle.
So it's funny, we touched on it earlier, but yeah, the advice that I would leave somebody with, especially somebody who is self-employed, if you're thinking about buying, don't assume that you can't. Go to the right, and not only go and check, but like you said, go to the right person and check. And as he said, the only right answer is go to the loan doctor.
Well, the brand team thinks outside the box. That's when the experience that I had with you was you put the financials in a way that made sense to the bank and made sense to us. That's why we were able to get the mortgage, because others couldn't. And we're talking about large banks that we had money in, investment accounts and savings accounts. No, you can't. You don't qualify, because being an entrepreneur, and at the time foreign nationals, it just didn't fit their box.
Because you weren't even foreign nationals. Well, I mean,
I was a foreign national back then.
At the time, you weren't, because you made money in the U.S. You were living in the U.S. So you, in your perspective, if you go back to that time, in terms of immigration status, there's a couple different designations. There's a person who's a U.S. citizen.
Right.
There's a person who's a non-permanent resident.
Right.
Or a permanent resident. Then there's a person who's a non-permanent resident.
Right.
So because of your immigration status at the time, you were a non-permanent resident. The difference between a foreign national and maybe I'm not remembering it right. A foreign national is somebody who is overseas and makes their money overseas.
Right. So, no, we had a green card. We had monies coming from Brazil, and we had money from the U.S. Yeah.
So I think one of the things that I'm fortunate to do well, if I could sort of toot my own horn for a second, is that I'm able to see all the pieces of somebody's financial puzzle and see how it fits together with the process, and then make that work.
Yeah.
It's been a gift. It was a pleasure to help you and your family.
Thanks,
I enjoy
Rich.
going to your house. It's awesome.
Yeah, anytime.
And I appreciate you having you on the Loan Doctor podcast.
Appreciate it. Well, if you guys are interested, you go to loan-doc.ai. So it's loan-doc.ai. And if you put in the code Loan Doctor, you have 25% off.
Oh, look at that. So if there's anybody who is in the mortgage business
Right.
that is listening to the podcast and wants to automate a bunch of their process, where do they go again?
For this system that we developed,
It's going to be on the bottom too, so don't feel pressure.
This system is called loan-doc.ai.
Okay.
For loan processing and loan officers. But if you're interested in us developing CRMs or whatever platform, whatever problems that you have that we can solve with technology, it's Beznos, B-E-Z, beznostech.com, BEZTECH.com. So beznostech.com, that's our main page where we have all sorts of solutions with images, photography, avatar, AI, chatbots. And
I'm going to challenge my social media guy that he's got to make sure to put that information on the bottom here. To make sure that your contact information was great. It was great having you on the Loan Doctor podcast. And again, for everybody who listened, thank you for being in my waiting room.